Kevin Cook back with Shiraz, Steve, and Kevin. I'm going to go to Steve first. Steve, we heard you did some cliff diving at Rick's Cafe in the Grill.
Not quite.
How'd that work out?
No, the vacations to a place like in the Grill, it just clears your mind. I put up a little post on Zax.com giving some musings, from the week, or at least how it pertains to how I see the market now. And this fixation on Europe, certainly important stuff, but I have a feeling that market was being pressed down a little bit low, and here we are on Monday, jumping up 3% on the day. So if only I could have bought that rally before it started.
But is this?
Yeah.
You said when I asked you before if you could pick one thing, you said it was clearly Europe driving today's 3% spike. But is this just a knee-jerk reaction on we hope it's good news?
Yeah. Well, like I said in the previous segment, that if the rest of the world didn't exist, okay, and we were just taking a look at the U.S. economic story and what the valuation for the S&P should be, it would be 1,350 to 1,400, given the level of earnings and so on. So every time there's any kind of good news out of Europe, their markets rally, and we feel it's time to rally too. Here again, we're being pressed down because of problems over there, and when you let go, it pops back up real fast.
But 45% of S&P earnings from abroad.
Yes.
Europe headed toward recession. China putting on the brakes, slowed out. Even though growth may stay above 8%, what does that mean for our markets?
Yeah, okay. We can handle a European recession, a mild recession, which they are probably already in right now. And if they contain their problems, then they work out a year or so, and then they come back up and they have their tremendous 1% GDP growth rate in Europe. Hooray! So that we can afford, okay, and that's not a problem for China that much, and we'll be fine. However, if they have a disorderly breakup in Europe, and then you have maybe on the verge of depression in certain countries, that is a flu that would spread around the world. Certainly it would be very poor for China. And then because of the problems with Europe and China and how much of our profits come from those places, yes, that would be a problem for our economy and our stock market.
All right, I want to go back to Shiraz on Santa Claus out shopping. Great Black Friday, Cyber Monday looks good. Is that part of what's driving equities today?
It is. The key narrative has been that the U.S. economy got into this mid-year hiccup, so to say. And over the last couple of months, it's been steadily coming out of that. And the strong Black Friday and Cyber Monday numbers basically reconfirm that the U.S. growth is on track. The third quarter, whatever it was, the fourth quarter is looking even better. And that's going to feed.
I just hate to think about 1 or 2 shopping days, being like a turning point for the economy. But I can see how it's indicative of what we can see here for the month.
You had 16% more sales on the weekend than last year. So a very solid start.
This is just putting an exclamation point on a strong retail sector really for the past 2 years. So it's not just 1 or 2 days. It's just underscoring that there is some underlying strength in the U.S. economy.
Those who have jobs aren't worried about losing their jobs, and they're spending money.
Right.
Okay. Those who don't have jobs, it continues to be rough. But those who have jobs,
face it, we're not savers, right?
Yeah, and they're getting back to old habits, and the economic data. I took a look at the macroeconomic advisors report that you sent me. They're looking for 2.8%, and they said that they're taking a look at other consensus, and other people are in the same ballpark. So here again, we went up from about 0.7% in the first half of the year to 2% in the third quarter, and maybe 2.5% to 3% in the fourth quarter. I mean, that's the right direction.
Yep.
Kev, technicals on the S&P. I liked the test of 1150. I would have been a buyer down to 1100. Do you still think we needed a test below 1100?
The 1100 area is a very well-recognized support area, give or take 25 or 50 points or so. I think that area is going to hold. If things were to get ugly and you saw the U.S. go into a recession, which doesn't seem to be in the cards right now, then you probably could go down to 1,000. That was a support area that hit over and over in 2010. But for right now, I'm still seeing 1,100 as being a good area of support.
We got to go. Stock picks next.